So you are welcome to part 3 of the incomplete account that we are doing. And in this lecture, we are going to solve the remaining 2 tutorial questions. So the first one we have says that the following example shows the various stages of drawing up a financial statement of a single entry. And so we have an accountant who has found the following details of Eugene Shops for the year ended 2015. And the sales are mostly on credit. So it's a very important statement, all right? And no records of sales has been kept, but 61,000 has been received from persons to whom goods has been sold, 48,000 of which is cash and check among that is 13,500. That is cash. And it says B, the amount paid by check to suppliers during the year was 31,600. And the expenses paid during the year by check, rent is 3,800, general expense 310. Then also by cash, we also have rent. Then the next one says Eugene took 250 per cash per week for 52 weeks, which means we have to multiply as drawings. Then we also have here that other information is available. You have debtors. This is last year and this is this year, because we are preparing this financial statement at 31st December, which is also confirmed here. It says that the only fixed asset, the fixed asset consists of fixtures which were valued at 31st December 2014. That is the last year at 3,300. They are to be depreciated 10% per annum, which means in the 2015 we will do the depreciation. Depreciation is part of the end of year adjustment, and we will look at that all right later. Okay, so what do we do to prepare the financial statement? We know the financial, when we say a financial statement or the financial statement, your focus should be on the two for now. So when we say a question says prepare a financial statement, it means do income statement. Do the income statement, which is the P&L, all right? Income statement. Then you will do the balance sheet. These are the financials. And we learned the processes leading to this preparation of the financial statement in the part 2 of the lecture video. So what we are going to do is to apply those steps. All right. If you remember, step 1 was to do what? Step 1 was to do statement of affairs. So we are going to do the statement of affairs. Now, the statement of affairs that we are going to do will give us the opening capital, right? So that is the statement of affairs. So that is our step 1, as we learned in this part 2 video. So let's look at. And in the statement of affairs, what we actually do is to do the asset is equal to capital plus liability. Then we do the change of subject to get the capital is equal to what? Asset minus liability. That is what we do in the statement of affairs, and it is to help us find our opening capital. So that is what we are doing. Now, in the statement of affairs, we are doing it for the opening capital, like I said before. So the focus is for the opening capital, all right? That is what we do. And so let's do that. So we have statement of affairs as at. So opening will be 1st December 2014, or you can say 1st January 2015, whichever way you do it. All right, so that is that. So do it nicely, and we are doing it for Eugene, right? So Eugene. So nicely, let's list all our assets and list all our liabilities. The asset of 2014, well, these are the informations we have. But aside that, be careful to know the point F, okay? Because the point F said that they have this asset, all right? So we start with the fixtures. All right, so the fixtures, you have how much? It has already been depreciated. This is the value as at this date. If we were to be the value as at January, then we will do our depreciation. The value as at these days means depreciation has been done already. So we have 3,300. Then the remaining asset, which is the current asset. So this is a fixed asset. The current asset, all right, we have what? We have inventory. Yes, we have stock. We have debtors. We have receivables. All right, which is the debtors. Hey, debtors are receivables. All right, I've written the two together. Then we have bank and cash, right? Bank and cash. And you could see the stock is here, 6360. The debtors are 5,500. Then bank balance is 5,650. Then cash balance is how much is cash balance? 320. So we add all our assets together. So let's add 3,300 plus 6360 plus 5,500 plus 5,650 plus 320. So what I have here is giving me 21130. So 21130. All right. So then we come to the liabilities. And the liabilities, I see creditors here. So creditors, which is also called trade payables, is 1,006. Then I also see rent owings, but there is nothing in here. So basically, that is the only thing that we are deducting, right? So minus 1,006. And this gives me 19,530. So that is my opening capital. So asset minus liability, that gives me my opening capital. So that is step one. All right, opening capital is done. All right, then we go to step two. All right, step two, what did you say we do? We do our cash book to find our cash balances. So we have our cash book. All right, so the cash book has, you do your cash. Okay, so you can decide to do it a 2-column cash book if you want, but you can decide to also do just a T account. All right, so basically that is that. If you want to do a 2-column cash book, you are not wrong. If you want to do a 1-column cash book too, you are not wrong. All right. So that is that. But to save time and because you have to do things speedily in the exams, I would prefer you do a 1-column cash book. So that if it's a check, you do a check. If it is a bank, but since we are learning here, why not do the 2-column system? Because that is what you began with in your day books lessons. So we have bank, or we have cash and bank. So that is it, cash, bank, cash, bank. And that is how the question 2 has been presented. So it's very important we do it like that. All right, so you have to be fast with your writing. That is also part of the exam. So if you are doing our cash and bank, these cash and bank balances are the balance brought down for the next year. So be careful to bring them in. So you have your balance brought down. Had it be that these things were overdrafts, so it will be here, the credit side. But what we have in this question is a bank balance, so we assume the normal. And please, bank balances are, what do we call it? Assets. All right, so assets has debit balances. All right, so that is that. So how much do we have? The cash is 320, and the bank is how much? The bank that I have here is 5,650. So that is what I have. So these are my balances. All right, so please take note of that. Take note of that. These are your balances. Then you look at some of the things that happen, the payment and the receipt during the year. All right, but right there, you also see your closing balances. They are here. So let's go to the events that happened within the year 2015 and see. This one says that they've not been keeping sales record, but 61,000 has been received from persons to whom goods has been sold. So right there, we know that goods has been sold to somebody and they received 61,500. And he said that that 61,000 can be broken down that they receive. So you have here receipts. Receipts. The receipt that we have, 48,000 is by check. So then 13,500 is by bank. Now, if you debit this account, what account do you think you normally credit? So you can decide to do those ones two down. All right, because immediately after this, what we are going to do is to do our sales ledger control account. Sales ledger control account, which is the debtors account. Okay, so it is called sales ledger control account. But we know that that is also what? The debtors account. All right, so take note of that. And we have our balance. So let's put the CD signs. We have the debtors, the balance for the debtors is 5,500. We have it here. Then this money that they've received, you see the debit here, the corresponding credit is also here. So bank, you write bank. Bank was 48,000 and cash was 13,500. Together we were told that that is 61,500. So that is the money, all right, that happened there. So that is what you do. You go on to, and it tells you that an amount by check to suppliers during the year. So this time around they paid, and they pay check. They pay check. So you see, just as you do for receipt, your payment too will be for purchases control account, which is also for suppliers or creditors. All right. So basically that is that. So you do purchases, and don't forget, this is our step 3. All that I'm doing here is our step 3. Purchases ledger control account. And this is for the creditors. It's the creditors. So what you'll be doing is to do your balance brought down from last year. The balance brought down for last year is how much? 1,600. And now, inside the cash book, we are told that we paid suppliers. So we pay suppliers by bank. So check of 31,600. So let's pay. So we've paid. Now the corresponding entry for this one is at the credit side of the cash book. So we say creditors, payment, all right, for what we purchased. And it is with bank. So we have 31,600. All right, so that is that. Then the expenses paid during the year, rent, and these were paid by check. So here you have rent. And immediately to remember our step 4. Step 4 is to prepare an expense account, right? Step 4. So here, how many expenses do we have? We have rent, that is here. And we have rent 2 in here. As for the general expenses, as you see, so we have rent by check, general expenses, then by cash to another rent, all right? So rent is plenty inside the question. So we will prepare account for rent. The general expenses is just only one, so we don't need to prepare any account for that. We just put it inside our P&L. So we have rent expense. So you prepared for rent expense too. All right. So now, what did we say about rent expense? We said prepaid brought down is here, right? Then owings carried down is here. When we look at the figures here, you see that there is rent owings, but there is no brought down. So rent owings brought down, there is nothing. All right, but owings carried down, there is something. There is something. How much is that? 350. So that is that. You put that down. So it means you've even catered for this. All right, and we are told that they paid rent. So this is it. When you come to your cash book, they paid rent by check. How much? 3,800. All right. You see, in the early videos, which I will plead you go to that part, you will learn how to do this double entry. To every debit entry, there's a corresponding credit entry. So that is what we are trying to do. Okay. So, and there was rent again. Oh, sorry, this rent is by check. This rent was by check, and the rent again by cash is 400. All right, so that is that. Then there's general expenses. So these two rents that are on the credits, when we go to the rent account, we are going to put it inside there. So here, rents, that is going to our SPL. We have bank and we have cash. The cash one was 400. The bank one was 3,800. All right, so that is it. And these are the ones going to our SPL. All right, so that is that. Okay, so be careful about how these things work. Okay, so now let's go in here. All right, then do our general expenses. So how much do we have for general expenses? The general expenses is by check and it is 310, right? And we are told that this guy did drawings. He took cash, so it is reducing our cash. So drawings. You see, the idea you should have in basic accounting is that if your balance brought down is here, your asset has debit balances. Anything that is reducing your cash will be on the opposite side. Anything that is reducing your cash will be on the opposite side. If you draw cash, you are reducing your cash. It will be on the opposite side. If you pay expenses, you are reducing your cash. It will go on the opposite side like that, okay? But anything that is letting cash come in. So in cash, the principle is that debit what comes in and credit what goes out. So you have to go back to the previous lessons and learn all these kind of basics, all right? So that is that. So when cash was coming in, we debited. And what is going out here, cash is going out. So you see we are crediting. All right. So basically that is how it goes. And the drawings, they took 50 is 52. So 250 multiplied by 52. And that gives me 13,000. So they withdrew 13,000. So by what? Cash, right? So drawings, 13,000. So now we are left with balancing the account. So let's start balancing. So in balancing the account, we have our balance carried down. So I think the balance carried down for cash is 420. Okay, don't mind my spacing there. Then the balance brought down is sorry, carried down for this one is 17,940. So that is what we have here. So let's total to find out if there is any difference. All right. Normally, there shouldn't be any difference. But if there is a difference, then it means that the difference, if the difference is at this side, so that would have been drawing. All right. So take note of that. All right. So let's see the balancing. So which side do you think will be bigger than this side? You learned balancing. I think my space is causing the problem. So what I'm going to do is to shift some of them down. So this one should be something here. One should come down. And we had our figures, right? So, you know, so which one was here? The figure here was balances. All right. I think this will be fine. So we had cash. Which one was the 48,000? The 48,000 was check. So this one should come. All right, like this. Let's bring our CD sign. then we have our balance. All right, so I'll just put this one closer. All right, so that I can get some space. So when you look at this, which one do you think will be bigger? Which side do you think will be bigger? So if you look at this one alone, you see that it looks close. So normally it should balance by itself. If it doesn't balance, then it means that the difference is either drawings or what, cash receipts or sales. All right, so that is that. Sales, cash receipts. So let's balance them. I'm seeing here to be 13,820, and I'm seeing here to be like that. I think it balances by itself. So that is that. So 13,820. Then this one too, the same thing, 13,820. And this one is how much? That will give me like, this goes into this, so that should be like 53,650, right? Let me see if we have the same thing here. So 31,600 plus 3,800 plus 310 plus 17,940. Yeah, the same thing. It gives me the same thing. So it balances by itself. So we have 53,650. So if it had not balanced by itself and there is a shortfall, the shortfall would have been these drawings. All right. That is what we call incomplete. All right. So with missing figures, that is the one that we call like that. And if the figures have been here, then it means that there are some receipts, all right, of cash, the difference. Okay, so that is that. We've done this. And so our cash has balanced. Now we come to this side. So this was our balance brought down. All right. So, I mean, we need to see total it. If we total this side, I think this side will give us the 61,500. But there's a problem here. So it means the missing figure becomes credit sales. All right. So credit sales. So that is how you find credit sales. So 61,500 minus 55. Okay, so what I have here is giving me like is it 60, no, 60, 56,000. That's what I have. But there is also a balance carried down here. So that is that. So let's put our balance carried down. Let me change the ink. The balance carried down, which is how much? 600. So it means this size changes a little. And here too, the balance carried down was with the creditors is how much? 2,600. So it means that this side will change. So that becomes 61,500 plus 6,600. It's actually 68,100. So let me write correct one. 68,100. So if I now deduct this one, it's 62,500. So 62,600. So that is the difference. And that becomes our credit sale. Don't forget, we will do step 5. So we will need that. So 68,100. All right. So basically, that is that. Now let's move on to the next thing to do. So here to the same thing. What do? You take your balances and the difference will also be what? Credit purchases. Credit purchases. So what is our figures here? All right. So the figure here will be, I think 33,200, right? 31,600 plus 2,600. 34,200. So that is what we have. 34,200. Don't forget, all these carry downs are also brought down here. All right. So if I take the 1,006 out, what do I have? I am having 32,000. All right. So that is what I have. 600. So 32,600. So that will form my purchases. So when we go to the SPL and we do add purchases, this is it. When we go to the SPL, we do our sales. This is it. All right. So that is that. So this is what you have gotten. So this is for the credit sales. But the cash sales, if here there was any difference, then it would have been inside here. All right. As receipts from cash sales, and that will amount your cash sales. All right. So that is that. Now rent owings, we close everything now. So it means the figure that will go here is going straight to our profit and loss account. Now, you see that when you were doing publication, if the person pays some expenses, you put it in the P&L. But if the person also was owing expenses, do you remember what you used to do? You add it. So that is what we have done here. So 1, 2, 3, all are going to our SPL. All right. So that is that. Owings. So, and this owings alone will also go to our balance sheet. You remember, because we will be doing balance sheet with these closing figures. All right. So that is that. So 3,800 plus 400 plus 350, that gives me 4,550. So it means that all this thing is going to my P&L. All right, that is where you close expenses to. So now we are done. Let's now prepare our P&L. All right, so let's now go ahead and prepare our P&L. So that will be our step 5, and then prepare the balance sheet. Then we are done. So let's do income statement. Income statement for the year ended. This is 31st December 2015. And like as we do it, nothing has changed. We have our sales. So the sales, the question even said that most of the sales are on credit. So it means we'll pick our sales from here. Where are you, sales? Okay, so this is our sales. Be careful. I didn't mean that the missing figure for the cash book, if the cash book, the missing figure that is not making it balance is on the credit side, then it's a drawings. But if it is on the debit side, then it means it's a cash sales, all right? But this one, we don't have anything like that. So straightforward, we move on, all right, and do such. So we did this one from our workings 3, right? And the sales we had is 62,600, right? 62,600. All right, so that is that. So let's record 62,600 less cost of sales. We start with opening stock. And what is our opening stock? Stock coming from last year. Where is it? Stock. So we have 6360, right? Add purchases. Where is our purchases? That one too is coming from our workings 3, right? So how much was that? 32,600. So 32,600. All right. If there is any drawings on stock, you will do it here. So now how much do we have? So I have 6360 plus 32,600. That gives me 38,960. What do we do? Less closing stock, right? Closing stock is here, which is 6,800, right? So that is that. So minus 6,800. So when I do that, it is, oh, I did 68,000. 38,960 minus 6,800. 32,160. So that is what we have. Then, so what will my gross profit be? So I have 62,600 minus answer. It gives me 30,440. So that is what I have. All right. Now what do we do? What we do is that we less expenses, okay? That is what we do. Let's less the expenses. What are our expenses? We did one on rent. So you bring rent. All right. Rent expenses. You could say you will write this once in your SPL. All right. Then you add this one, but it has been done already. So what is going to the P&L? You just write our workings 4. Then put there 4,550. Then what other expenses do we have? The general expenses. Okay. So the general expenses is 310. Then the depreciation they wanted us to do, all right, which they said is 10% on. So the 10% per annum, Okay, so this is the only figure we have there. So the 10% is 310, right? So let's add this and deduct. So I have 4550 plus 310 plus 330. I have 5190. So what is my net profit? So 30,440 minus answer gives me 25,250. So this is my net profit. All right. Just a second. So we are at the last stage of what we need to do for this tutorial set question. Then we will go on and do the last one. So we will do the balance sheet asset. So balance sheet. Please, if you write a balance sheet instead of statement of financial position, you are not wrong, all right? So take note of that. 2015, right? Remember how we do it. Cost, accum dip, then net book value. So we start with our fixed assets. So let's put our CV signs. So the only fixed asset we have in this question was fixtures, right? So fixtures, we are told that this is 3,300. And we had depreciation of how much? 330, right? 10%. So so what is the difference? Our net book value, 3,300 minus 330. So that gives me 2,970. The test of your correct answer is that your balance sheet has balance. All right, so let's do our current assets. We have inventory or stock, the closing stock. All right, so what is the closing stock, which is 6,800? Then what do we have? We have our debtors. And here we use closing balances. All right. So if you go to your debtors account like this, you pick the closing balance, but which you know it is already in the question. So the closing balance. Oh, what have I done? Yeah. The closing balance of the debtors is 6,600. So that is what you have here. The creditors to 2,600. That is what you have. All right. So we don't even stress that much over here. All right, unless there is a bad debt, which we would have done inside there, here to take the bad debt, it would have affected our balance carry down. So the debtors too, we have 6,600. All right, then we have our bank, we have our cash. All right, there was no prepayment in this question. So the bank and cash here, where are they? The bank is 17,940. So we would have found that in our cash book. All right, so then the cash balance is 420. So that is what we have. So let's add them. 6,800 plus 6,600 plus 17,940 plus 420. All right, so that gives me 31,860. So that is what I have. Let's less our current liabilities. All right, so less current liabilities. So current liabilities, remember we have creditors and we have rent owings. So the creditors and the rent owings, we have 2,600. Rent owings is 350. And that is what we are taking out of our 31, the 31,850, 860 that we have. Okay. So that is that. So you go on to do that. Okay. So how much do we have? This is 350. So let's do that. We have so let's add 2,600 plus 350. That gives me 2,950. So let's take away 2,950. All right, so if we take this one out, how much are we having? All right, so a little check. This one is 6,800, 6,600, 17,940, 420. And if I add them Okay. Oh, all right. So I've seen a small error. This one is actually supposed to be 31. So please, just like if you are also doing it at your end, be careful. Yeah, it's actually 31.7 because I see 6. I see this one making this one 4. All right. And I see the 9 making the thing 13. Then I see this making it 17. But I when I had it, looking at it again, you see there's a little problem. So when I now less my 2950, what I get is 28,810. So you to be very careful. Let's balance this plus 2970. Sorry. So you have 31,780 to be our balancing figure. You see, when you are doing something like this, you can actually start from the bottom to see what the balancing figure will be, because you always know your finance by capital, opening capital, right? And the opening capital, you did it in the very first step. How much was that? The very first step we did, statement of affairs. Where are you? 19,530. So let's go. So you can always know from there, 19,530. So 19,530. So we have that. Then you add the net profit that you found from step 4. So this is coming from workings 1. Net profit that we have, which was our step 4. What was that 2? Net profit 25,250. So 25,250. I can tell you that this 8 has come already. So that is what you do. So when you add it up, how much do you have? So 19,530 plus 25,250. That gives me 44,780. What is left? You know, drawings. We less drawings. How much was our drawings? We did, it was 52 weeks multiplied by 250, right? So 25 0 multiplied by 52. That is 13,000. And we had it in our cash book, so you can also go and reference it from your cash book. All right, so if I now do 44,780 minus 13,000, what do I have? 31,780. So this one is technically our closing capital, all right? And you remember from our very first video, we said opening capital plus net profit minus drawings. So that is that. Should be giving us our closing capital, and that is what we have done. All right, so basically that is what you go through. The next thing we are going to do is to look at the tutorial set question 3. All right, and it is the same processes we are going to go through, these same processes, find the missing figures, and that will be that. All right, so we are going to go through and do this. Okay, so that is that, and I'm going to do that in another video so that this one will be a prolonged video. So see you in the next video of part 4. All right.